Hi, it's Mark here. It is Thursday, February the 12th, and after a real volatile and strong move lower in oil today, I think it's a relevant time just to share some of my thoughts with you on trading oil. Certainly one of the CFDs that make up a big part of my trading portfolio. And today I think presents us with a lot of new opportunities once again, trading Brent oil. Before we analyze the chart, a couple of notes are put down here to share with you. Oil is no longer just a commodity. It's a global economic indicator reflecting global confidence and global economic direction. And that's why I've included it in our 5 daily assets that we look at: US dollar index, S&P, gold, Bitcoin, and oil. It has its own unique characteristics. It's defined by uncertainty rather than stability. And volatility is a defining feature of the oil market. One might think that being a commodity, the price is solely dependent on supply and demand. Not the case. It's political statements, central bank signals, and geopolitical scenarios and risk all play a part in the price direction. And it moves on expectations, just like we saw today, not necessarily on confirmation. There's Brent and there's crude. I personally choose to trade Brent oil. Brent is the global benchmark. It's sourced in Europe, and typically the price is higher than that of crude. I find that the volatility is smoother on Brent than it appears to be on crude. Crude is America's oil. It's the US benchmark, sourced from Texas and surrounding US regions. The fundamentals, which, as you know, move the market, as we stand now in February, the range pretty much between 65 and 68. Maybe it's moved a little bit higher over the past couple of days or weeks, maybe between 67 and 69, close to 70. That's where we're sitting. What are the fundamentals affecting the price? Firstly, geopolitical risk in the Middle East and in Russia have a marked effect on the supply concerns on oil. OPEC Plus was created for market stability regarding supply and price within this volatile market. Saudi Arabia, the key supplier. There are non-OPEC members as well that help to maintain a balance, being Russia, Canada, the US, big players as well. The demand, one of the key influences demand-wise would be economic growth concerns in China and in Europe, particularly relating to Brent, and new trade deals which could create uncertainty regarding future buying patterns. Current immediate influences would be the winter weather and what is going on right now with US-Iran negotiations, exactly the way we saw things play out today. I want to get the charts up for you. There we are. And here you see the sell-off today. Before I look at today, let me zoom out and just show you what I've put up here is the high of last year, 2025, to the low of last year to now, 2020, beginning of 2026, is $81.78 and 58.22. If we measure, I'm putting up my Fibonacci retracement tool. If I measure from the high right down to the low, the 50% retracement level is at $70. Remember this tool, we measure the rebound. We measure how strong from a preceding trend, how strong is this move? Do we expect it to continue, or is it going to get held up at one of these levels? The most relevant level being the 50% level. And as I say, that's at $70. And have a look where the current uptrend got held up, exactly at that $70 level. There you have it. It tried it end of January, tried it again yesterday, and this is where we got the bounce down today from that level. I think that is significant. From a trading perspective, I've put in as well, let me just take the retracement out and have a look at what we see now this year. You see this bounce up is showing a succession of higher lows. Every time it goes up and comes down, it's higher, it's higher, it's higher. Buyers keep stepping in before it hits the previous low, which is a strong bullish signal. And it's played out. You can see from down here, the start of the year at under $60, it got all the way to $70, and now it has come back down. What I'm looking at now is if you see these levels, if we get a bounce up of today's support at $67, will this level prove to be the next in the succession of higher lows, and oil bounce back up from here and look to revisit that $70 level? Alternatively, if selling does continue and sellers break below today's support, will this be the next level that sellers have to deal with? And that is the higher low sitting at $66.51. So that's where we're sitting now. I do see opportunities going forward because of the volatile nature of oil. And like I say, because these moves come based on expectation, we use our fundamental knowledge, but looking for technical indicators that give us our confirmation that we can apply strategy, our relevant strategy, to what we're seeing on the charts. So I'm sharing my thoughts on oil with you because, as I said, it makes up a big part of my trading portfolio. I do believe there's wonderful opportunities trading Brent oil, and I wanted to share that with you. Good trading.